RealAg Live, everybody. I'm your host, Sean Haney, broadcasting today from the friendly confines of my kitchen in my house here in Lethbridge, Alberta. Thanks a lot for joining us here today on the show. We are going to do a real super deep dive into the markets today. We're going to focus on corn, soybeans, and wheat, but I know today's guest is pretty much up for anything. If you have a question that you want to ask or a comment, all you have to do is ask it in the comment box, whether you're watching on YouTube, Twitter, Facebook, or Twitch. I also want to remind you that if you ever miss portions of the show, you can actually go check out the archive, and you can find it at realagriculture.com/live. And on that page, you can watch the live stream as well as get kind of an update on what the schedule is. And you can see the past episodes there that you can scroll through. Man, it's amazing. After just starting this in March, we're already at like episode 98. That is crazy. Time has really gone so fast. You can check out the archive at realagriculture.com/live. Let's bring in today's guest. It is Ted Seifried of Zaner Hedge. Hey, Ted, how are you?
I'm doing well, Sean. How are you today?
Hey, man, I'm great. I am great. So, Ted, what's going on with the markets overall here right now? We're mid-December. Christmas is right in front of us. Is there a lack of liquidity right now? Like, what? How much do we judge the movements on a daily basis when you get this close to the end of the year?
Yeah, I mean, that's a good point. I mean, there's still a decent amount of volume right now, although it is sharply lower than what we were looking at in November. It's going to get quieter and quieter as we get into the holiday period. So, by the end of this week into early next week, it will start getting really quiet. And it can, by quiet, I mean lower volume. We can still see some kind of funky moves happen in that holiday time frame. And look, this is a year where that could very well happen because, go back to my first year off the floor. We had Mad Cow on Christmas Eve, and that sent markets crazy. Well, this is the situation where we could get some news happening right around our holiday time frame that's not necessarily a holiday time frame for, say, China. And let's say China sneaks in and buys a decent amount of soybeans or cancels a decent amount of soybeans right around, Christmas Eve, something like that. You can get a big move when really nobody's paying attention. So this is it's been a very strange year.
Yeah.
That could carry over into our holiday trade session as well.
Yeah, no kidding. 2020 is one we will not forget. It's one we'll refer back to. Remember in 2020 when the beef cutout like doubled or even more than doubled in a short period of time? Like it's been that kind of year for sure.
Gave it all back.
Yeah,
Right.
yeah. Very quickly too, just as quickly as we got it. And Brian points out, forget about Mad Cow. What about Mad Beans? That seems to be what's kind of been on a run. Hey, we got it.
Yeah, buddy.
We'll get a question, or we'll get to the soybeans in a second. Ken has a question. Why is the spread between Chicago and Minneapolis wheat so large?
Yeah, that's a good question. So obviously you have different varieties of wheat there. There's a bigger premium. There always is a premium on that Minneapolis wheat, but it is exceptionally large at the moment. We have sort of an abundance of milling wheat, but the higher protein wheat is where we're really looking for. And again, if you look at the price of soybean meal, right? I mean, that's really gotten very expensive. So that really benefits Minneapolis more than it does, say, Chicago wheat or Kansas City for that matter.
Yeah. How much, was it last Friday where we had the news out of Russia where, they made news in wheat and then the market rallied. Then Monday, Tuesday, we kind of gave a lot of it back. What's going on with Russian wheat exports?
Yeah. Okay. So, we got excited because from the very top, Putin said that he wants to combat or address the inflation that they're seeing in Russia, particularly food inflation. And when we think about inflation, food in Russia, we think about wheat. And the easiest way for them to address that would be to limit their exports. And when we hear something like that, when we hear that the world's largest wheat exporter, and really the only other country that has, available large quantities of available exportable wheat is going to limit their exports, we think, wow, we're going to get a whole lot more business. And that on top of the dollar continuing to push lower, we get excited about that. But then, this week we think, yeah, we've heard this before.
Wait a minute.
And they don't do it, and they benefit from the higher prices that come from that sort of talk. And then also, you can say maybe we've gotten a little bit better of a change in our forecast for our growing areas. You put that together and you get a bit of a pullback. Now, we tried to regain some of that strength yesterday. We didn't go very far with it, and then under a little bit of pressure today. I think at the moment we're just kind of taking a little bit of a breather. And wheat from here on out, I think, is going to take cues from a couple of things. One, we have to watch those exports very closely. If we do start seeing a big pickup in those exports, hey, listen, we've got a ball game here. Secondly, the U.S. dollar really plays into that. If we continue to push lower in the dollar like we have been, and it just, in the last 2 days has really kind of broken out to the downside again, that could really benefit our wheat exports, even if Russia isn't in actuality really limiting their exports. And then thirdly, and maybe most importantly, watch row crops, because if you start to get a extension of the rally in corn and soybeans, wheat will benefit from that as well.
Yeah. On behalf of all of Canadian farmers, can you please stop this U.S. dollar move that's going on here right now? You're not helping us, Ted. I would like to formalize our complaint to you.
Yes. Well, to be honest with you, I don't really like it either. I mean, while it is good for commodities as a whole, especially exportable commodities, that are priced in U.S. dollars, it's not, in my opinion, it's not great for our country. I've had about enough of all the stimulus that we keep throwing at the market. And I understand that there are people hurting out there because of the situation that we're in. But man, when are we going to have to pay this bill? This bill is coming due, and it's going to be paid by people like me, not necessarily like, our fathers, but it will be paid by us further on down the line, and even to our kids. So I'm with you, man. I'll sign that complaint myself.
Hey, got a question here from Brian. Do the export prices of soft and hard wheat also reflect the Minneapolis-Chicago inverse?
Yes, for the most part, yes. I mean, obviously, there's always basis that's involved, and that changes sometimes faster than the futures market do. But for the most part, yes, that has been reflected in our export figures.
Okay. We got here. No, I went through all of them. Okay, let's see what else I got here. I wanted to ask you about China and wheat, because we continually always hear about how much of basically the world's inventory they hold. It's staggering. And I guess, can we believe that number? Like, what's going on here?
Do we ever really believe anything that's coming out of China?
I'm
right?
hesitant, Ted. I'm serious. I'm hesitant. Oof.
Yeah, no, I mean, me too. And listen, the market is also, even the USDA is, right? We did this not quite a year ago where the USDA said, all right, we need to get this world wheat number under control. So we're going to start providing a number that is world wheat minus China. Because again, the China number at any given time represents 50 to 70% of the world wheat supply. And we know, because we just saw this happen in corn, that sometimes they will be reporting things that may not actually be true, or maybe they had it at one point, but then, the quality has gone to, lack of a better term, poop.
Yeah.
I mean, it's just not there. It's not usable anymore. So, it's hard to say, but the very bottom line of it doesn't matter. And the reason I say that is because China is not a major wheat exporter. So it's not like we're competing with all of that wheat that's over in China. They're typically not a big importer either. So when they do import, it's usually at the very most up to their TRQ quotas, or their tariff exempt quotas. It probably won't be a huge deal. Now, personally, I don't think China buys a massive amount of wheat from us, but it's been interesting to see that they have been in there for purchases on wheat. To me, that says there might be quality issues with their wheat reserves that they have. And that could mean that both the U.S. and Canada might benefit from wheat exports going forward.
Yeah. Now, weather. We can't talk about markets without mentioning weather. And based on what I've read, we've got some dryness in Russia. We've definitely got dryness in the Canadian prairies. We have some dryness in the U.S. wheat belt. I didn't have time to check on Australia, but based on the regions that I listed, that's a significant amount of some of the wheat growing areas of the world. Is that a bullish factor?
Also throw Argentina in there. They had really late planting because they were really very dry. Australia has had some issues as well. I think our forecast has gotten a little bit better. We got some snow cover, some moisture.
Okay.
But yeah, I've been saying for a few years, so there's too much wheat in the world, right? Even if you take China out of the equation, what you're going to need to see is you're going to need to see production issues in multiple major exporters, and we're kind of seeing that now. Now, I don't know if this is $7 Chicago wheat situation. When we hit 620 a couple weeks back, that's kind of getting to levels where it's like, all right, we're going to need something else, some more help, maybe help from the row crops, something like that, to really keep wheat going higher than that. But I mean, look at the prices, Shaun. Wheat prices are pretty darn solid compared to what we've been seeing the last few years.
Yeah, let's get to the commodity that I think is like it's amazing when you look at some of the charts, and that is soybeans. I guess we can talk about how we got here. I think as you look ahead, that's the more interesting question: is where do we go from here,
Yeah.
and what do farmers that know they're going to have inventory on a 21 crop? How do they approach this? Because Ted, as the market goes higher, people are like we blow past targets that people would easily have accepted, like $2 lower, and they
Right.
creep higher. This is a really tough one to figure out. What's your insight?
Okay, so there's a couple questions there, Shaun. But first, let's address where do we think we're going from here, right? And let's look at yesterday and today because there's some kind of telling things going on here. For one, we had a really nice reversal off of lows and closed higher yesterday, and it was a very key point in the chart to do something like that, and that was really good. Now we tried to follow through higher here today, but we gave up all of those gains and closed marginally lower today. That's not ideal for soybeans. However, look at soybean meal. Soybean meal got just within striking distance of the previous highs that we set, right at that $400 a ton level, and then backed off just slightly, but closed relatively near the highs. That soybean meal chart to me looks like it wants to go and make new highs. And I think the soybeans are going to do the same. However, that $12 level is a big number, and you've got guys selling against it, and I'm not terribly surprised about that. But I think soybeans get through it. And if you look at what corn did today too, again, held on to the strength into the close. That corn chart to me really looks like it wants to go and make new highs. So I still think there are more fireworks to come. The crush number that we saw,
Yeah.
181. Wow, that was a new record for the month by a long shot. The previous record, 165, was from last year. But look at the difference, 165 to 181. My gosh, the crush is rocking and rolling. And that number might have to go higher on the USDA's balance sheet. We're already at a 175 million bushel carryover. That is next to nothing. We talk about pipeline. I mean, there's a certain amount of soybeans that are in transit that just we can't get to zero on a balance sheet. In other words, in my opinion, about 110 on a soybean balance sheet is the equivalent of zero. And we're rapidly approaching that. What if we get into the January report and the old adage of small crops get smaller and they shave something off of production for soybeans? Well, man, we're finding ourselves in a scenario where it's not only likely that we're going to run out of soybeans, we might be almost there already. So, yeah.
Could you import them from South America then? Is that what we see?
Bingo. So that is the situation that we have to sit here and ponder, and that is what our domestic end users might be left with back, when we get to say August, for example, or even sooner than that. And what are the logistics of getting soybeans from Port of Paranagua up through the Gulf, offloaded up, and then put onto barges, going up the river, and go to a terminal on the river, getting offloaded onto a train, and then sent to say Omaha or Sioux Falls.
Right.
What is the cost involved in that? Because even though Brazilian soybeans, in the late spring are priced less than ours because they're expecting, big crop. Let's say it costs $2.60 for the logistics, which we're not set up for in a big amount anyways.
Yeah.
I mean, we can't do this. We can do anything on a large scale if the price is right? But what does that price have to be? And if it's $2.60, well, if Brazil's selling 10.50 soybeans, then the equivalent to that's going to be $13.10 here. well, then any bean that's left in the country is going to be worth at least that, if not more, because it'll be more readily available. So, yeah, I mean, that's a real problem. And it
Hey
will
Ted,
happen to a
Ted,
small extent. And we definitely will get some imports from Brazil and possibly Argentina coming to the eastern seaboard. But how to get Brazilian or South American beans into the interior presents a very difficult challenge that we've not had to deal with before. And it really brings out the question, what would the cost be for something like that?
well, and didn't Argentina have to do the same thing at the end of their selling? Didn't they have to import a bunch of beans from the U.S. because they had basically exported everything? They had cleaned out every single closet that they had. So it's interesting. The same thing is happening here on the back end of the U.S. selling season.
Right. So Brazil is going to have to take in about 800,000 metric tons of U.S. soybeans. Now, for them, it's a little bit easier because their crushers are located on their ports. So when we send it down
Right.
to them, it doesn't have to go deep into the interior of Brazil. It just goes to the ports, and then they're good. So they already have answers to these questions that we've never even asked before. Now, Argentina has a pretty solid stockpile of soybeans. They're producers, and even some of the big multinationals are very, very reluctant to sell soybeans because they're so worried about the currency fluctuations that they're having in a country that seemingly is just perpetual unrest, that they're using soybeans as a hedge against inflation, against their currency. And so they've got something between, I'm going to say 12 and 15 million metric tons of soybean stocks that they're sitting on. If they ever choose to release that, that could put a lot of pressure on global bean prices. But I don't know if that'll happen anytime in the near future. I really kind of think it won't. If anything, you look at a La Nina forecast for them, and it's early in their growing season. So far, it's been pretty good, kind of not typical La Nina. But if that starts to kick into their main growing season, they might need those reserves. They might not be able to sell them. They might need it for the crush. So I don't see Argentina selling anything aggressively anytime soon. We know Brazil is out until they have their crop coming, being the product coming to ports and able to ship. So for a little while here, we are really the only name in the game. And with a strong domestic demand, it's really hard to say that we don't need to do more work to price ration soybeans.
Question here from Kara based on something you said earlier. What's driving up the soybean meal price currently? Is that have to do with that Argentine strike?
Yes. So the Argentina strike is really kind of, I mean, you look at the soybean meal the last couple of days, it's really given us a shot in the arm, and it gives that soybean meal chart a look like it wants to break out to the upside, which is really very beneficial for soybeans. But I'd also say that, we've got strong feed demand here in North America as a whole. So that is certainly helping. We've seen some pretty solid export business coming in for soybean meal here over the last few weeks. So yeah, the soybean meal demand is there, and then you get a little bit of supply question mark with the other biggest exporter of soybean meal in the world, and all of a sudden we've got a little bit more of a ball game. And again, to me, I look at the soybean chart, and although today was a bit of a disappointment, I see extension higher still.
Okay, good. Well, that's farmers are going to like to hear that. Question here from Brian, 2021 U.S. corn acre, or regarding U.S. corn acres in 21. Bean corn spread right now supports more beans. Do you have a shot at the dartboard for an acreage estimate?
A lot of people will say it's way too early for that, but no. I'm even considering what acreage might be for 2022. So yes, I absolutely have a shot at a dartboard on that. And I don't know if you guys are going to like it, but with the planting issues that we've had the last couple of years, obviously 2 years ago was a major problem. We had issues everywhere, but last year we still had a lot of issues up in the Dakotas. I see acreage as a whole growing next year compared to what the last 2 years have been. I think a world exists where we add another 4 million acres of soybeans, 4 or 5 million acres of soybeans, without really seeing a big cut in corn acres. So I think corn acres are going to stay relatively true right around the 90 million acre mark here for the next couple of years. So, for the people saying that, hey, what if corn loses 4 million acres next year? I don't really subscribe to that here at the time for the moment. A lot of that's going to depend on how planting looks when we get into a little, as we get into the spring. But I have a hard time getting super bullish based on acreage for corn at this moment. Now, that being said, I really do feel like global demand for corn is really picking up, and that is a good thing. I would much rather have a demand-driven bull market like we're seeing in soybeans right now, compared to a short supply driven bull market, because short supply driven bull markets really only last until the next marketing year when we have a chance to replenish that supply. Demand driven bull markets can stick around for cycles. They can be around for years. And I feel like that is really what we are now just starting to realize. And that might be the situation for the next few years. And that's got a really good feel, because even if we do get a break come the spring on good planting, and we do get, a significant amount of acres planted in both corn and beans, ultimately that's just going to breed more demand. It's going to find that global.
Oh, I think we might. Oh, there we are.
I'm optimistic that something like that might happen.
Okay, so I'm hearing from you the story on corn and soybeans. There's maybe some more challenges in front of corn. Is that a good way to put it here? And if so, is that based on what's going on with ethanol usage? Is that an example of one of the things that's a bit of a challenge?
Yeah, ethanol is a concern. I mean, we're certainly not traveling as much as we had been, and so we need to get back more towards normalcy. I don't know if we'll ever really get back to full normalcy, but we need to get closer to that in order to really get, not just ethanol, but, fuel usage as a whole, going. The feed's going to stay there. I don't see that going anywhere, but ethanol is the one that really does concern me. We could still hit the USDA's target, but in order to do that, we're really going to have to see, spring and summertime pretty close to normal. And we have optimism for that because of vaccines. And, that's really been big news here the last couple of days as that rolls out. I'm a little skeptical. I'm a little optimistic, or I'm optimistic, but skeptical. I'm always bullish ethanol from a standpoint that I see it as being a huge component of energy independence. I see it as being a super viable resource for cleaner energies. I think ethanol is great. I've converted my vehicles to burn E85 mainly because I like the horsepower that I get out of it when the car's tuned properly. But yeah, I mean, look, we need to be traveling. We need to be flying. We need to be moving around.
Yeah.
And if we're not doing that come spring and summertime, well, that's going to be a really up road hill for corn.
And in a Biden administration, I was reading this morning a story about how, with Vilsack coming back to the USDA, big focus is going to be climate when it comes to his next stamp on the USDA and his return back there. Biofuels plays a role in that discussion, man. That's something that farmers can talk to the Biden administration about and have some common ground.
Yeah, I think the EPA mandate, I'm not worried about it going down under the Biden administration. If anything, I think it goes higher. So that's good. You also wonder, if there's going to be limitations on new drilling. Trump kind of really wanted to make a very big push at the end of his presidency to open up the Alaskan wildlife. I don't think that's going to happen. And if it does, I imagine that gets shut down pretty quickly. So you're not going to have this wide open marketplace for crude oil, which is good, because we are going to look to more of the alternatives. And if the prices are fairly inexpensive, which we've got a lot of stocks of ethanol right now, that's something that I think will get used, and we will see that E10, E15 blend get taken advantage of.
Okay, so this is domestic use. We got ethanol, we got feed, but there's also the export number. There was a lot of talk here through the beginning of the phase one deal between the U.S. and China about the opportunity for corn exports. Has that momentum held, or has it backed off somewhat?
Well, it has backed off somewhat as prices have gotten higher, and that's to be expected. But the problem for corn hasn't really been the sales number, although we would like to see. I mean, we'd love to see 3 million metric tons a week, but it's not the sales number so much as the shipment number. I mean, we are well behind our average pace of shipments versus what we have sold versus a normal year. Now, you can argue a big part of that is because we're shipping an astronomical number of soybeans on a weekly basis. So do we have the capacity to do both? It's been an argument that's been going on for years of whether we can really handle massive exports of corn and soybeans at the same time. The short answer to that seems to be no. But the real question for corn is what happens once we get past our main soybean export season. So when we get into February, March, April timeframe, are we going to be setting massive records on corn shipments? If we do, we've got a shot at getting close to the USDA number. If we don't, then that's a bit of a problem. At the moment, I feel like the USDA is a little bit overstated on exports. As we talked about, I think they're a little bit overstated on ethanol usage as well. However, as we talked about, big crops get bigger, small crops get smaller. That corn production number has been under pressure here for the last few months. The USDA obviously takes a break on that in December, but when we see the January report, if they lower corn production, that might go a long way to offsetting a little bit lower demand in a couple of the categories we've talked about.
I like these market sayings, these little rules that we all sort of live by, and we laugh, but honestly, Ted, a lot of times they actually happen and they come true. So they are definitely worth paying attention to. Question here, a couple more questions. Got a question here from Brian. Do you think that China ever implements an E10, E15 mandate? There have been rumors, but haven't seen anything confirmed.
So that was supposed to happen for 2020. But then they really backed off on that for a number of reasons, phase one trade deal and issues with, trade, that being the biggest one. But honestly, I don't think they have the infrastructure ready for it. I do think they want to do that. When you see pictures of like Beijing and just like this orange fog that they get during their summertime, yeah, I think no, but that's a long way for China. I really do see them doing that in the next couple of years. But to do that, I think they really need to build up their corn stocks first, so they know that they have at least some control on their domestic corn prices. So maybe that is a catalyst for why they're buying corn from us, and maybe that means they're going to be buying a lot more corn in the future, maybe a lot more ethanol. But yeah, I mean, you have to be kind of skeptical of that because, again, that was on the docket to happen, and then it just kind of evaporates, and they haven't given us any sort of timetable to get back to doing that.
Sort of throw stuff out there just sort of loosely, like little trial balloons. Hey, world, what would you think about this? And the markets go crazy. It's like, I don't know. That was kind of fun to see you guys all scamper around and talk about it. But looking into the forecast for 2021, is there any crop you were bullish on that you weren't a couple of months ago, short of soybeans, of course?
Well, short of soybeans, of course. Well, I mean, if you look at the drought monitor, and I don't want to cause too much of a fuss here, but if you look at a drought monitor in the United States and Canadian prairies, this is the worst it's been since December of 2011.
Yeah.
So I think I'm kind of worried about this upcoming growing season for the whole lot. That being said, I'm more bullish corn now than I had been before, and not necessarily because of the acreage talk that we just had. As you know, I'm maybe a little not bullish corn on that side of things, but I've been very impressed with how global demand for corn is really increasing. We went through a long period of time where global demand for corn had been backtracking, and we had been oversupplying. But now I'm feeling a lot better about corn than I was a few months ago. I'm definitely going to say that.
Okay, awesome stuff. And Ted, I want to make sure I got this in. The most important question of the day for both of us: will the Bears draft a quarterback this year in the NFL draft when this season is over?
We have to. There is no way around it. We know Mitch is going to go. We're not going to fight that. We don't, he had maybe his best game of his career against Houston, but
doesn't matter.
Does not matter. No, we need to. And man, if you think about all the quarterbacks we could have had even in that draft.
Deshaun Watson, Patrick Mahomes. It's just it hurts every week, every Sunday.
Every week.
Does Matt Nagy go?
Yeah, I think he has to.
I think he does too.
I mean, this team this year has not been a bad team. The defense is there, aside from some small, miscues. Nagy just can't keep them together. I think a lot of this year's problems have been coaching, right? So I want to blame Trubisky. Foles, stepping into a program. I mean, you can't really blame him too much. I think the blame really falls squarely on Nagy's shoulders, and I think he's got to go.
The way that Nagy coached in year one is not the Nagy that we have seen since. For whatever reason, not sure.
Yes.
But, I don't know what exactly has happened to him. So I didn't even watch the Packers game. I had Packers fans text me. I'm like, I'm not even watching. I don't care. I'm
Yeah,
not even watching. I'm not putting myself through that sort of abuse.
yeah.
Hey, we've been talking today to Ted Seifried of Zaner, Ag, Hedge. Ted, I really appreciate you joining me here today, and all the best. Have a Merry Christmas, and we'll talk to you again in the new year.
Sounds good, Shaun. You have Merry Christmas as well. Talk to you later, buddy.
And like I said to everybody, if you want to see the archive, go to realagriculture.com/live. Thanks a lot for tuning in today. Remember to check out RealAg Radio this afternoon, 4:30 Eastern on Rural Radio 147. We're talking clean fuel standard the entire show, breaking it down for you, giving you some of the details. Thanks, everybody, for getting real and getting connected with RealAg Live, and we'll chat again tomorrow. Cheers, everybody.